Well, good afternoon, everybody. This is Jimmy Slagle, the Dart Throw Trader over at www.dartthrowtrader.com. And if you've been watching this Bear Stearns fiasco like I have pretty much all day, and actually we started watching it last night in the currency markets, watching this thing unfold, if you've been watching this today, I got one thing to say. If you lost money in Bear Stearns, or if you know somebody who has, either through individual stock purchases or through mutual funds or any other type of investment vehicle where Bear Stearns was involved, if you've lost money in this stock today, it's your fault. And I know that's going to send some ripples through the financial community, and some of you are going to send me some hate emails, but you know what? Let's get over it. And let's deal with the reality. The reality is Bear Stearns fell apart today amid a lot of reasons, but it was all foreshadowed a week ago. And I'm going to walk you through how you could have seen it, how you should have seen it, and how you would have been able to recognize it if you'd been a member of the DartThrowTrader.com program. And so we want to step into this, and if you're looking at the chart with me right now, you'll see Bear Stearns. This is the chart dated from January the 2nd, which was the first trading day of the year, until March the 5th, which was about a week ago, actually about 12 days ago. And the reason I'm looking at March 5th is very specific, and it's actually twofold. Number one, on March the 4th, actually the day before the chart here, on March the 4th, we actually, at DartThrowTrader.com, we got a sell signal on Bear Stearns. Now, our proprietary indicator system that we use to help us make trades and make decisions on long-term investments like Bear Stearns stock purchase would have been, on this position, we got a sell signal on March the 4th. Now, it didn't come until after the market closed, obviously, and so we couldn't have done anything about it until March 5th. That's why I'm showing you the chart right here. But here's the point. A couple of things happened on March the 4th. Actually, if you look at the chart pretty close, you can see some obvious things. Number one, we broke some short-term support at around 80 bucks, 79, 80 bucks a share. And we also had three significant down days on our bars. And then on March the 4th, we had a proprietary technical signal say, sell it. Now, does that mean we sell the stock on March 4th? No. Does it mean we sell it on March 5th at the open? Probably not. But what we would have done was at least hedge ourselves and protect ourselves from any more downside risk. And if things start to get ugly, then we could have liquidated the trade, and we could have guaranteed a profit or at least a position in our trade. So what we want to do is we want to take a look at what happened between March 4th, when we got our signal, till today, and walk you through some things that you could have done, should have done, and what you'll be able to do as a member of Dart Throw Trader and the programs that we offer. Now, March the 5th, the stock opened at $77.75, $77.75 a share, and that is a streaming cry from where it is today at around $4 a share. So hindsight being 2020, you would love to have sold the stock on March 5th. Most of you didn't, if you're watching this and doing that. But I want to walk you through how you saw this coming, how we saw it coming, and how you could have prevented any future loss from that $77.75 a share point. So with that being said, I'm going to kind of fast forward to today on the chart so you can see where we're going and what we're going to do. Okay, we fast forward the chart now from January 2nd till today, which is March 17th. And I want to point out a couple of things that you're looking at on the chart right now. First of all, you see the blue line running down the right hand of the screen. That is March 4th. That's when we got our signal. And if you're looking at the chart, you can see prior to that signal, Bear Stearns was fairly stagnant, fairly range-bound, moving and fluctuating between about 75 to 85 bucks a share. And then when we got our signal, things started to unfold, and we started to see this coming. Now, I want to fast forward to the blue arrow that you may see, which is on actually March the 10th. And March the 10th is a significant date in this story as it unfolds, and the reason is because on March 10th, Bear Stearns was actually downgraded by Moody's Investor Services, and they downgraded him for a lot of reasons. I won't go into that now, it's not important, but there was a downgrade. And on that downgrade, the stock slipped down a little bit, you can see in price, and actually it dropped to a 5-year low. Now, shortly after that downgrade came out and some other rumors started circulating around in the marketplace, there were lots of statements made by Bear Stearns, and I want to quote a couple of things that they said and walk you through why this is so important. There was an article that was sent out by Reuters, and the particular article said that Bear Stearns companies denied on Monday market speculation that the investment bank faces a cash crunch, but its shares fell 11.1% after an earlier dropping to a 5-year low. Now, in a statement after the market closed, and this was on March the 10th, after the market closed, Bear Stearns said that there is absolutely, and I'm quoting here, absolutely no truth to the rumors. They said that Bear Stearns' balance sheet, its liquidity and capital remains strong. Now, that is according to Alan Schwartz, who is the chief executive in the statement. Earlier on Monday, Alan Greenberg, who chairs the company's executive committee, told Reuters that the rumors were totally ridiculous. He said, they're rumors. What can I do about it? Now, this is a legendary trader who ran the investment bank as CEO from 1978 to 1993. Now, March 10th, another article written by Jed Horowitz came out and said that Bear Stearns declared Monday that its financial condition remains strong despite a steep drop in its stock. Now, that was on March the 10th, and some other news came out that started to come out. Now, if we're looking at the calendar, around March the 14th, and if this is the 10th, 11th, around March the 14th, and I'll put an arrow there. On March the 14th, which is right here, more news started to come out about this stock and what was going on. J.P. Morgan came out and said that they were going to throw in some funding and some things of that nature. So there was a lot of stuff happening on March 14th, and Bear Stearns drops 39% on liquidity concerns and these kinds of things. And then it really started to unfold on Friday. And then on Friday, the stock dropped from 55 down to almost 25 bucks a share. So we saw about a $30 drop in the stock on Friday as some of this news started to come out and started to get a little bit more serious of what was going on. And then today, if you've been watching the market today, you know what's happening today. I don't really have to go a lot of detail about what's going on today. But what we know is that Bear Stearns basically is getting bought by J.P. Morgan for $2 a share. Now, the stock's trading a little bit higher than that right now because it's not really a cash deal, it's a stock deal, and that's what's going on. But here's the point. The point is, on March the 4th, if you'd been a member of dartthrowtrader.com and you knew our system as we know it and we teach it, you would have seen the signals. You would have seen the warning signs coming long before this stock fell apart. In fact, you would have been able to either liquidate your position or at least protect yourself from downside risk, and you could have guaranteed yourself the ability to sell your stock for at least 75 bucks a share. That's what we want to teach you how to do at dartthrowtrader.com. So what I'd like to do is introduce you to something we've put together to help you walk through this, to give you some very specific detailed information about how you can prevent things like this Fiasco and Bear Stearns happening to your portfolio in the future. What we've done is we've created a free report called Portfolio Disaster Avoidance. Once again, the title of our report is Portfolio Disaster Avoidance, and it is the only guaranteed method of protecting your portfolio on the planet. And we're basically convinced that anybody can copy what we're doing over here once they understand it, okay? So if you're tired of losing money in the stock market, if you're tired of losing sleep at night, if you've become afraid to open your brokerage statements, then this report may very well be the most important, most exciting, and most valuable information you will ever read in your entire life. Look, at dartthrowtrader.com, we have helped thousands of investors just like you protect their assets. And last year alone, man, we helped people really get to the next level of their trading, and we want to help you do that this year because it's now your turn. We've been helping and working with people since 1996, and we've been teaching a growing group of investors and traders how to make outstanding profits by simply copying the methods and the tactics and strategies of other successful professional traders. If you want to get your hands on this copy of this free report, Portfolio Disaster Avoidance, while it's still available, I want you to point your browser to www.dartthrowtrader, one word, dartthrowtrader.com/PDA. PDA, Portfolio Disaster Avoidance. Once again, that website address is www.dartthrowtrader.com/PDA. Now, if you're watching the video, you should see it right now at the bottom of the video. If you're anywhere near our website, you'll obviously see it at the bottom of the website under there, and you can click on the link to get your free report. Once again, it's a free report. All we ask you, give us your name, your email address, and we'll send you a link so you can get the free report right now. Hey, Bear Stearns is falling apart today. Who's next? We don't know, but we want you to protect yourself, and we want you to get Portfolio Disaster Avoidance, the only guaranteed method of protecting your portfolio on the planet. And we're convinced that you can do this if you'll just understand it. So with that being said, have a great day. Hopefully you're not in Bear Stearns anymore. If you are, maybe it'll come back, but I doubt it. So with that being said, have a great afternoon. We'll see you at Dart Throw Trader, and we'll see you at the dartboard.